Good afternoon, ladies and gentlemen. Happy Friday afternoon, and welcome to the Securities Commission of the Bahamas' webinar, Learn How to Protect Yourself from Investment Frauds and Scams. The Most Honorable Dr. Hubert Minnis, Prime Minister of the Commonwealth of the Bahamas, has declared the month of October as Investor Education Month in the Bahamas. In the official proclamation, which is on the Commission's website, www.scb.gov.bs, the Prime Minister recognizes the capital market's importance, their critical function in economic development, and how good financial practices such as budgeting, saving, responsible management of credit and debt, and investing are essential to the well-being of all Bahamians. He also underscored the need for financial resilience, which we've all been reminded of as a result of the coronavirus pandemic and recent climate events. This October, and going on into November, the International Organization of Securities Commissions, IOSCO, is celebrating World Investor Week. And the Securities Commission of the Bahamas is pleased to host this webinar as a part of its World Investor Week initiatives and to join securities regulators across the globe in this celebration. We hope we have an exciting program for you today. We certainly have an informative one, and we thank you all for joining us. We hope that you come out of this knowing a little bit more about how to protect yourself from some of the more prevalent frauds and scams that are out there, learning what the Commission's role is in helping to protect you as well. We're going to get warmed up today with a quick poll question. So if we can go with that poll question, we're just interested in knowing if you have ever yourself been asked to or solicited to invest in something that you suspect was a pyramid scheme. So it's a chance to warm up that clicker finger. We're going to have question and answer later. And while the poll is up and I give you a chance to answer that poll question, I just want to quickly introduce our next segment. We have our opening remarks, which are going to be provided by Chief Superintendent Matthew Edgecombe, who is the Director of the Financial Crimes Investigations Branch of the Royal Bahamas Police Force. We're so thankful that he has recorded these messages for us. And I'd like to say that he's going to be available for our question and answer period at the end of the segment. So if you have any questions for him, please hold them until then. So I'm not going to put up the actual poll results until after that presentation, but I'll just give a few more seconds for everyone to take a chance to take some time and answer that poll question. And I think everyone now should have been able to answer if they think they've been asked to invest in or solicited to put some funds into a pyramid scheme. Whether, you'll learn more about what a pyramid scheme is in a moment. But without ado, I'd like to turn to the pre-recorded remarks from Chief Superintendent Edgecombe.
I am Matthew Edgecombe, Chief Superintendent of Police and Director of the Financial Crime Investigations. Please allow me to extend greetings from the Commission of Police for the sense of regard. It is It's indeed a pleasure to share with you Dawn 2020 Investor News. I will impart some pertinent information on the topic that affects both your industry and my office. I am talking about fraud. When we speak of fraud, we are referring to deceitful acts perpetrated on, expectant victims who are scammed out of monies. Over the past years, my office observed a number of fraud-related trends, and it truly makes you realize that just how dedicated we are to prevent and protect our people from such scams. The criminals are just as dedicated to finding ways to circumvent systems to benefit from it financially. As we experience advances in technology, fraudsters are developing and devoted to finding gaps and loopholes to allow them to exploit such operations. One of the scams that we have investigated over the past years here in the Bahamas, one is known as Ponzi scheme. This is a scam where participants invest money to a person or organization with hopes of getting high returns on their investment. Participants are required to bring in new investors who then are required to do the same. Usually within this scam, the early investors are able to see their profits on their investments. However, if the money is not generated into the program, eventually the latter investors will not see their returns. It is usually the last wave of the new investors that suffer losses. In the Bahamas, we have seen similar activities, as they all recall the Lehman period that occurred several years ago. There were also several companies in operation that purported to be ASOs, but were based on the same principle as the Ponzi scheme. With that information, the sources of payments were caught up in these programs, and many of them lost money. We have also investigated matters where companies have offered monies, lending services to other financial services or financial services to the general public who will be registered with the Security Commission of the Bahamas. Several of these matters were investigated and sent to court, which have resulted in convictions and fines. You must also remember that our small business owners also become victims of fraud. Many of these business owners try to make investments to improve their businesses. Or on the other hand, side of the law. Although social media platforms have many benefits, we must remember that there are a group of persons who use these platforms to their advantage, to defraud persons. We have also received a number of complaints over the years as respect to online scams. Persons report receiving emails or messages through social media platforms, advising them that they are winners of certain promotions or contests. They are then encouraged to send money to foreign countries using money transfer companies as processing fees in order to claim their prices. After sending off monies, the victims soon realize that it is only a scam, as they never received such prices. Similarly, there are emails sent to persons under the disguise of their banking requesting them to verify or refute transactions. These persons unknowingly provide their bank details and their accounts are later compromised. This is commonly known to us as a phishing scheme. In conclusion, we don't want to discourage persons from making investments and conducting transactions that can improve their businesses, but rather just be mindful that fraudsters are around and they should take the security of their businesses very seriously. We want to encourage business owners to make wise choices and do all that they can to ensure the strongest protocols are in place to keep their business safe. also want to encourage persons that when a fraud scam is discovered, report these matters to the police so that they can be investigated and the offenders or offender brought to justice. This can help to prevent other persons from becoming victims of fraud. It is indeed a pleasure to share with you today on this topic. I trust that the information will be useful as you carry out your duties. Thank you and enjoy the remainder of your week.
So I think I was muted. I apologize. We'd like to thank Chief Superintendent Matthew Edgecombe for those excellent remarks. He reminded us to watch out for social media platforms and to beware of sending funds to foreign companies using money transfer firms. He told us about the dangers of phishing scams and phishing schemes where people are trying to get your personal information, your banking information, and that the number of investigations and prosecutions for these things are on the rise in the Bahamas. So we appreciate those remarks very much. I'd like to take a moment to see what the poll results showed. Can we take a look at the poll results? Okay, while they're getting those, here are the poll results. So of our audience, 81% of us have actually been approached. As far as we know, we believe we've been approached by someone soliciting us to invest in a pyramid scheme. That's a high number. I don't know if it's higher than I thought would be or if it's lower than I thought would be, but that's a really high number. And I think indicative of just the level of these types of scams and frauds that are out there and how so much of us are affected by them. We're going to turn now to Christina Roll, who's the Executive Director of the Securities Commission of the Bahamas, to really talk about the most prominent, the big four, we call them, investment frauds and scams. Before we turn to her, we're going to ask another poll question. So if we can get that poll question up, basically wondering if you have received an email from someone you don't know asking for something coming from a +234 area code. There it is. So have you ever had a WhatsApp or a phone call message from someone you did not know, starting with the number +234? Simple question. I'll talk a little bit more about why we're asking it after this next segment. So as I said, we're going to turn now to Christina Roll, Executive Director, Securities Commission of the Bahamas, who is going to tell us about the major types of frauds that are out there, the typical structures, how you can spot them, and therefore how you can avoid them and help to protect yourself. You can go, Christina, you're live.
Good afternoon, everyone. Good afternoon, everyone. Sorry about that. I was having some difficulties getting my screen up. But good afternoon, everyone, and thank you for joining the Securities Commission of the Bahamas, for what we hope will be the first in a series of webinars designed to assist the general public when it comes to navigating the world of investments. Before I launch into my presentation, I would like to give a shout out and say a special thank you to Chief Superintendent Matthew Edgecombe of the Royal Bahamas Police Force Financial Crimes Unit for taking the time to record these excellent remarks and to open our webinar this afternoon. Having the support and involvement of the police force for an event like this means a lot, because when it comes to prosecuting certain financial crimes, the Commission has limits as to what the law allows us to do. We must therefore rely on our partnership with the police in this ongoing struggle to protect the investors from frauds and scams. The Commission's Enforcement Senior Manager will speak more about the Commission's legal scope in his presentation, but I just want to mention that within the scope of our mandate is the charge to educate the public about the risks, benefits, and liabilities associated with investing. Education and information about investing is one of the principal tools regulators around the globe use to protect investors. While it is a powerful tool, education must be implemented to be fruitful. So we hope you choose to apply and share with others information we share today to protect yourself and your loved ones from becoming victims of financial frauds and scams. This afternoon, I want to introduce you to this topic by telling you about the big 4 types of investment frauds and scams, and give you some information about how they work, how to spot them, and provide some tips on how to avoid them. We'll discuss pyramid schemes, which have been around for a long time and certainly pop up in the Bahamas frequently. Every year, there seems to be new versions of this with sizzling, exciting new names, promising fast, easy money for the price of making an initial investment and bringing a certain amount of family and friends or strangers into the scheme. We'll also distinguish the slightly different Ponzi schemes, which can be traced back to the mid-1800s and have also seen an uptick in this modern age. Some of you will remember the Bernie Madoff scandal of 2008, when the stock markets crashed because of the financial crisis, and many people found that their investment portfolios were fake. I'll also talk about pump and dump scheme, which are a form of market manipulation where fake news is put out to affect the price of a security and gain an unfair advantage. And finally, we'll visit advanced fee fraud, which may or may not have securities element to it, but sometimes do, and are very prevalent, especially in this age of social media. Anyone who has gotten an email from a fabulously rich Nigerian prince who they never met, but who only needs you to send him a few $1,000s so he can access his inheritance knows about this scam. Certainly my 90-year-old mother knows about it. As I move into the signs and indicators of the big 4 frauds and scams, I want to say that the Bahamas is by no means unique in the world when it comes to people who are willing to perpetrate these schemes to take advantage of others. Unfortunately, the economic hardship that so many people are suffering as a result of the coronavirus pandemic has spurred many fraudsters and scammers on, driving them to take advantage of people desperately in need of funds and willing to part with the little they have in order to get money they desperately need. Scammers watch and wait for crises such as the one we are currently living through. The U.S. Federal Trade Commission put out a warning in May of this year, saying that schemes going by the names like the Mandela Game, Blessing Circle, Infinity Loom, and Giving Circle were chain-letter pyramid schemes. They explained that many of these were promising that you would collect $800 for an investment of $100. And at the same time, help bring good fortune to someone else by recruiting them to join. Does this sound familiar? On 10th August, the Federal Trade Commission issued a warning also about a Susu pyramid, which was masquerading as a traditional informal savings club. We know these informal savings clubs in the Bahamas because they're traditionally known as the ASU. The scheme gained traction with African Americans in the US and soon regulators in the Caribbean, including Trinidad and Tobago, the Eastern Caribbean states, the British Virgin Islands, and of course, the Securities Commission of the Bahamas, were issuing warnings about the same or similar pyramid schemes in their jurisdictions. Pyramid schemes are fairly easy for a scammer to get started. And because of the quick money promise and low initial investment, often being an amount that ordinary people can get their hands on, to these schemes, there's always a new one coming out. Ponzi schemes, on the other hand, may not have the mass appeal of pyramid schemes, but due to their structure, the losses can often be staggering for individuals, and even sometimes for sophisticated investment firms. The largest 3 Ponzi schemes in history together accounted for $28.4 billion in investor losses. All 3 collapsed and were discovered around 2008, 2009, when the financial crisis and its consequential market downturn made it impossible for these fraudsters to keep their schemes hidden. The Bernie Madoff scam is the most well-known of the 3, as investors thought they had $65 billion invested, though this amount was part of the smoke and mirrors fiction he created. Investors actually lost about $17.4 billion through the Madoff Ponzi, whereas investors only lost about $7 billion in the second largest Ponzi scheme. Robert Allen Stanford Certificate of Deposit Ponzi should not be understated, though with PonziTracker.com reporting that 21,000 customers in 113 countries across the globe were defrauded to finance his lavish, jet-setting billion-dollar Playboy lifestyle. What I really want to underscore here, though, is the recent statistics showing high levels of Ponzi prosecutions in the United States in 2019, suggesting activity in this area is on the rise again. Though the US SEC opened 827 investigations in 2019, they so far only uncovered 60 alleged Ponzi schemes representing $3.25 billion in investor funds. This prompted CNBC journalist Greg Licurici to conclude that the booming stock market and the deregulatory emphasis may be leading more criminals to engage in investment fraud. The ratio of charges versus investigations also suggests that gathering of evidence and proving the case often presents a big challenge for regulators. For us in the Bahamas, pyramids and Ponzi's represent a real and ever-present risk. In fact, all of the big 4 schemes do. I would like now to pivot and take a look at the schemes now in terms of how they work and how to spot them. If you move forward 1 slide, please. Here on the slide is the typical multiplication effect of a pyramid scheme. The scheme works by first promising a big cash payout based on a much smaller investment. The investor is asked to put money in and then to recruit several members to the scheme. The promised payout is dependent on the additional recruits. As the scheme expands, it becomes impossible to recruit new members. This stage and outcome is always inevitable. And it is here where the fraud is undeniable, as the promoter of the scheme does not have the funds to make good on the scheme's promise, or at least return monies to the investors. It is important to stress here that this scheme is always unsustainable. It will crash. In the Bahamas, we have seen some of these masquerading as so-called public ASUs. They almost always pop up around Christmas and close to school reopening. You may recall the Loom, Flower, Pineapple. All of these were local pyramid schemes that crashed. A Ponzi scheme operates almost in the same way as a pyramid scheme with some subtle differences. In fact, many people often confuse Ponzi and pyramid or use the words interchangeably. Usually with a Ponzi, though, there is no pressure to recruit additional investors. The promise of high returns is usually sufficient to lure in those that are trusting, in the same way as a pyramid. though, redemptions, sales, and withdrawals of investments are funded by new monies from new investors. In fact, there is usually absolutely no underlying investments at all. Let me repeat that. There is usually absolutely no underlying investments at all. It is usually just smoke and mirrors masked by a complicated system of tracking fake investments and giving false made-up reports to investors. As the number of investors increase, the amount of money the scheme owes to those investors also increases and grows exponentially with investment gains. This creates what is known in the investment world as a snowball effect. Imagine a snowball rolling down a snow-capped mountainside. As it rolls down, it picks up more and more snow, thereby becoming larger and larger until it crashes. This investment snowball, known as the Ponzi, crashes when the promoters can no longer keep up with investors' withdrawals and redemptions. A big red flag for an investor should be if your broker tells you that you're not able to transfer out your securities, but must instead sell them off and take the cash. At that point, you should question whether the broker has the securities at all. So moving along to pump and dump schemes. While these are not seen often in our domestic market, they are prevalent in the international market, and entities doing business in or from within the Bahamas are sometimes caught up in this activity either due to their own trading or the trading activity of their clients. In fact, these fraudsters like to use international accounts to conduct pumping activity because they perceive that there is less chance for detection. The way it works is that a fraudster buys or already owns stocks that are trading very low. What we call penny stocks, that is stocks that are trading for less than $1, are the favorites for this scheme. They then issue a barrage of misleading or outright fake news in order to generate interest in the stock. Once legitimate buyers enter the market and start buying the stock, they sell their stock at a higher price and considerable profit. Please note that this activity is a form of market manipulation, and it is not allowed under securities laws in any jurisdiction, including the Bahamas. In fact, through a robust multilateral memorandum of understanding, securities regulators around the world cooperate and share information in order to combat this and other types of market manipulation. So whereas pump and dump schemes are not so common in our markets, the last type of scam I want to talk about has been around in the Bahamas for decades, although the means of delivery are being updated to take advantage of modern technology. They used to be commonly known as the Nigerian letter scam, and there are probably people on this webinar old enough to remember when you used to get physical letters in the mail. Nowadays, these come by email and WhatsApp messages. Interestingly, even today, many of these scams still originate out of West Africa, and some of you will have received mysterious offers from phone numbers starting with 234, which is the country code for Nigeria. Don't be fooled though. Some of these scam operators are physically located right here on our doorsteps. The proper name for these scams is advance fee. And the way it works is that usually a complete stranger approaches you and tells you an incredible story about how it is they have inherited or have access to loads of money, but need you, a stranger, to send them money and very often your bank account details, after which they can access the funds due to them and pay you a handsome portion for helping them out. Hopefully that sounds as crazy to you as it does to me, but these schemes persist because on a yearly basis, thousands and thousands of people worldwide are suckered into them. It may be a prince or princess forced to flee with a fortune, but they just need some money to escape the country, then they'll send you your share. It may be a letter on what looks like a real company's letterhead saying you're entitled to fund from a class action lawsuit. One staffer of the commission got a very official email a few months ago saying that she was entitled to part of an £18 million settlement for some estate in the United Kingdom. They didn't want cash, only all of her personal banking details, after which she'd get her unexpected inheritance. These scams do not always involve securities per se, but at the core, they involve someone asking you to give them money on the promise that you will get more money in return, essentially asking you to invest in them and their lives. Before I turn things over to Gwen, I want to review some general tips to help you protect yourself from investment frauds and scams. These are all red flags that should caution you to be extra careful, as you are very likely dealing with someone fraudulent. The first I've said already, but it's worth repeating. If it sounds too good to be true, it probably is. You have to be skeptical and apply common sense. Why is that stranger offering you money? If they are so wealthy, why do they need funds from you? How did you win a lottery for which you never bought a ticket? Why is this stranger leaving you money? Or why does a law firm you know nothing of need you to help get an inheritance? If someone is trying to get you to invest in a business or idea, ask questions and then ask more questions. How is this business going to make money? What are they selling? Who owns this business? Who are the people who will manage the business? How does this investment work? If you're not getting answers that make sense to you, or instead of answers, you get threatened that you will miss out on an opportunity if you keep asking questions, that's a sign something may be out of order. Beware of a lot of pressure to invest now. When the salesperson starts telling you, if you don't get in now, you'll miss the boat, you may be better off letting that boat sail without you. Get promises in writing. Talk is cheap. Is the person saying you are guaranteed to get return from this investment or from this magic circle willing to put the promises in paper and sign it? Do your research. You probably work hard for your money. Well, you need to do some homework before you invest your money. If someone is selling you securities, for example, are they registered with the Securities Commission? Is the person operating from a real place of business where you can visit, or just from an email address or PO box? Are there reports about this business that can help you? Finally, and it's not on the slide, but be very wary of how you are asked to make payments. Frequently, fraudsters are using things like iTunes and other gift cards to get their money. If someone is asking you to buy these gift cards and send them the card details, it may be a sign that they want to avoid the banking system. Money transfers are another common method used for these frauds, and fraudsters may ask you to buy less traceable cryptocurrencies to transfer funds as well. I'm sure I can go on and on with this topic, but those are just a few critical tips I want to share with you today. Thanks for listening, and I look forward to answering any questions you may have in the Q&A session later.
So I thank you very much, Ms. Roll. That was very informative. I wish now that I had asked the poll question. You remember when we used to get letters in the mail? But let's actually see what the results of the poll question was that we did ask about the 234 area code. Just give a moment for the tech support to bring that poll result up. And while they're bringing that result up, the next, well, here it is. So 60% of us, 60% of the people on this participating in this webinar have had messages from Nigeria, and according to the question, don't know anyone in Nigeria who'd be sending you a message. So, and as Ms. Roll pointed out, we have people who are doing this right from within the Bahamas. So we need to be wary, need to apply common sense and follow some of the many tips she provided. So without ado, I want to introduce Mr. Gwayne Ward, who's our Senior Manager of Enforcement at the Commission, to talk about the Commission's actual role and functions in protecting investors. So we turn now to Mr. Gwayne Ward.
Okay, I think I'm on. Yes. Good afternoon once again to our participants. And thank you for joining us in this webinar, Be a Smart Investor. And to those persons in our international community who may have joined us today, good day wherever you are, and we trust you are also remaining safe while the pandemic still affects many of our countries. And as some of you, most, if not all of you, may well be aware, unfortunately, the pandemic is also the background for increased fraud and therefore heightened investor awareness and regulatory protection. So the Securities Commission of the Bahamas is responsible for overseeing securities and capital markets and protecting the integrity of those markets from unfair or improper practices. And this is laid out in sections 12 and 13 of our Securities Industry Act of 2011. We are a statutory body, and so we focus on the Commission's role in that regard in investor protection. So let's start with what guides the Commission's actions. What are our functions and what are our powers? We are governed by legislation, as I'd indicated, and we have certain functions and powers or authority, which, as was earlier indicated, are outlined at sections 12 and 13 in our Securities Industry Act. And so I won't go through all of the provisions in each section. We'll just look at those provisions that relate more specifically to investor protection. And so under section 12, the functions of the Commission are to, and this is at D for those that are interested, and you can go and see our legislation on our website, www.scb.gov.bs. And once you look under the section that includes our legislation, you go to the Securities Industry Act of 2011, and at 12D, you will see we have the function of protecting the integrity of the capital markets against any abuses arising from financial crime, market misconduct, and other unfair and improper practices. We also promote an understanding by the public of the capital markets and its participants and the benefits, risks, and liabilities associated with investing. And that's at section 12E. Now, in the exercise of its functions, the Commission shall satisfy itself that the provisions of the Financial Transactions Reporting Act of 2018 and any other act or regulation administered by the Commission are being complied with. That's at subsection 2 of section 12. Now, under section 13, the powers of the Commission are outlined. And it reads, for the purpose of the discharge of its functions, the Commission has power, subject to this act, to, and this is at 13C, authorize and regulate regulated persons and other market participants with a view to maintaining proper standards of conduct and professionalism in the capital markets. And next, we monitor the solvency of regulated persons and take measures to protect the interests of clients and others where the solvency of any such person is in doubt. A little further down at H, we take enforcement action against any person for failing to comply with securities laws in the Financial Transactions Reporting Act of 2018. And as you may well be aware now, we also at 13J publish notices, guidelines, bulletins, and policies describing the views of the Commission regarding the interpretation, application, or enforcement of securities laws. Now note, the Commission is legally mandated to enforce the Financial Transactions Reporting Act only for our regulated persons. Other regulators, such as the Central Bank and Insurance Commission, they're responsible for enforcing the Financial Transactions Reporting Act relative to their respective licensees. And so we move then to the Commission's role in investor protection. And one of the main ways the Commission protects investors is through overseeing how our regulated persons deal with their clients. And we do this by ensuring compliance with securities laws. Now, the greater the level of compliance with legal obligations and financial best practices, these all include ensuring clients' interests are protected. And there is, we find, a considerably reduced likelihood of issues where investors are concerned when we have this compliance with securities laws and other related legislation, and of course, as mentioned, the financial best practices. And so with the next slide, you will see that anyone can readily check a person's regulatory status on our website. Again, that's www.scb.gov.bs. And there you will see whether or not a person is regulated by the Commission. And if there's any uncertainty still, even after checking that webpage, you can, or perhaps additional questions, of course, you can call us at 242-397-4100 or email us at info@scb.gov.bs. Now, note that the Commission also addresses complaints from investors, ensuring that in the case of registered or licensed persons, those complaints are in the first instance addressed by the registrant or the licensee so that they have the opportunity to address the complaint, which frankly may be as simple as a miscommunication, or it may be more serious, but nonetheless can still be solved between the two parties. More often than not, once the registrant is aware, the result is they address the client's issue. And so registrants and licensees are also legally obligated to ensure that they maintain a record of client complaints. Failure to address a client's concerns may result in the Commission addressing the registrant in the context of whether there is a breach of the securities laws. Happily, circumstances of the Commission having cause to intervene is not prevalent for the Commission. Now, where you have unregistered or unlicensed persons, these are persons that are operating without a registration or a license, then this is a criminal offense. And the Commission will generally investigate to confirm the breach and the extent of that breach. And the Commission is also empowered to file a criminal complaint with the police. And we are also authorized to get the assistance of the police with investigating matters. So, with the foregoing in mind, whether it involves a regulated or an unregulated person, but especially the latter, you may send your complaints to the Commission also from our website under the Investor Center tab. And it's www.scb.gov.bs/complaints. Or you can just send your complaint to ecomplaints@scb.gov.bs. That's ecomplaints, one word, at scb.gov.bs. That email address I just gave, you will find within the complaints section of the Securities Commission's website. Now, you will have heard earlier under Section 13, the Commission also issues public warnings to let the investing public know about schemes soliciting the investing public and any entities purportedly involved with securities about which the Commission has concerns. And we, of course, relay those concerns to the public. Now, these warnings are issued to help investors and also may include matters for consideration, which are to be kept in mind, of course, when making your investment decisions. As you are well aware now, social media has made it very easy to promote schemes and scams, so beware. You've just heard from our executive director about scams, and the Commission, also in its capacity as the Financial and Corporate Services Provider Inspector, we aim to discourage people from unwittingly becoming part of fraudulent programs like Ponzi schemes and pyramid schemes. And you will have noted as well that this issue is not confined to the Bahamas. In yesterday's broadcast presentation, for those of you that caught it, we discussed some of the hallmarks of Ponzi and pyramid schemes and multi-level marketing programs and the red flags to be aware of when investing. And you would have heard of those again from our executive director and even more. And so I won't go through those again. However, I just want to point out that much of yesterday's information on Ponzi and pyramid schemes and multi-level marketing programs, particularly the various stages that I referred to, they are from an International Monetary Fund, or an IMF, paper from 2009 entitled Ponzi Schemes in the Caribbean. And that was produced by Ana Carvajal, Hunter Monroe, Catherine Patillo, and Brian Winter. For those persons that are interested in reading further, and I do encourage you to do so, the paper is readily available on the IMF's website, www.imf.org. Look under the Publications tab and look for the paper entitled Ponzi Schemes in the Caribbean. I do encourage you to go further. Familiarize yourselves with fraudulent schemes simply with a view to further educating yourselves, and particularly, of course, if you have any plans to invest or perhaps further invest. So, from our prior discussion, you may now appreciate that investor protection is actually a cooperative exercise between the Commission and you as the investor. The Commission protects investors through its ongoing oversight or monitoring of regulated persons, the prosecution of unregulated persons, as well as it informs investors through warnings and through educational forums, such as this one. And so in our next slide, you will see that all of this is done in an effort to promote better informed investment decisions on the part of investors through a better understanding on the part of those investors about the benefits, risks, and liabilities associated with investing, as outlined in Section 12E of the Securities Industry Act. Investors are also encouraged, be vigilant how and with whom you invest your money. Do your own due diligence and arm yourselves with information necessary for you to invest in a manner that is suitable to your own personal financial circumstances and your investment goals. Thank you, and I invite any questions, of course, that you may have at the appropriate juncture.
Good afternoon, everyone, and thank you very much, Mr. Ward, for that presentation. I hope you legal students especially were taking notes. That was excellent, and thank you, Gwen, for sharing that. And that brings us to the end of the presentations, and we move now to our question and answer period. We have a little video lined up as well. We have one question in, but what I'm going to do is maybe we can roll this video from back in the day. A little reminder about what Pyramid's about as we get some questions in and address the questions that are coming in. Before we move to that, I want to say to Giovanni Ferguson, yes, we will put a final version of these slides up on the Commission's website, www.scb.gov.bs, and they will be available in the Investor Education section of that page, which is found in the Investor Center. I would also like to thank Steph Fraz for the FOMO note, which is the fear of missing out that fraudsters and scammers often do use to pressure us into acting now. They tell you, if you don't do this, if you don't take advantage of this, boy, I'm going to give this to someone else and you're going to miss out on this opportunity, and it gets us. It's part of how we lose. So, yes, just want to make sure I'm not muted because I had that little fiasco earlier. So we're going to just move quickly to that video as we allow for 1 or 2 more questions to come in, and then we're going to see if we can answer some of these questions.
And sweet talk you to get you to trust them. To spot a pyramid, you have to look at how they operate. Typically, pyramids start with an initial recruiter at the top. The recruiter binds people to invest a certain amount of money in his business. Prospects are promised big money for their investment. All they have to do is bring in some more investors. In some schemes, you don't even have to bring in new investors. The promise of quick riches does all the recruiting. No goods are sold, no services are sold, no trading takes place. There is no business. All that happens is that money changes hands. So, what's the problem? Where's the fraud? Since pyramids rely on new investors to pay old ones, they all fail eventually. Promoters must deceive people into thinking they will get their money back, plus a profit. It is estimated that more than 90% of people who invest their money in pyramid schemes lose their money. So, can you spot a pyramid scheme now? Then choose not to be a victim. Don't encourage other people to become victims. Share this video.
That's a little flashback from 2 or 3 World Investor Weeks ago, but still relevant and pertinent to everyone. So we do have 2 questions in, well, 3 questions now. So I'd like to start with the first question. And these aren't, it's interesting, the questions aren't really necessarily on this topic, but we're here. And so Lynette Taylor has asked, Seeing that we are now more fully into the age of virtual business, how relevant is the question of an investor having, actually this is related, how relevant is the question of an investor having a physical presence, a physical place of business, sorry, to help to determine its legitimacy? Ms. Roll, do you want to field that question?
Yeah, so I actually typed a small response to Lynette already.
You're fast.
but okay, so here goes, Lynette, and I do, Lynette, don't get me wrong, I'm not trying to be a dinosaur. I do understand the question and the context of the question. But when you come to the financial world, most regulated entities are still required to have a physical presence. This is international best practice, and we're unlikely to get around this for quite some time. There are legalities around how notice has to be served, and all of them require some physical address. So there are some regulated entities that do not require to have physical operations, but most do, okay? Now, when you come to non-regulated entities and even regulated entities that don't need physical operations, they should at least have a registered address. I mean, you should know where you need to send someone. If you need to send the police somewhere, you need to know where that is. So everyone should have a registered address. It can't just be an email that they can shut down and you don't know how to get in touch with the person, or a telephone number, which very often is a burner phone, and they get rid of the phone and then you don't know how to contact them anymore. You should do your due diligence, and everyone should have some physical address where you should contact them. That doesn't necessarily mean they have to have physical operations. So let's distinguish the two, okay?
That's excellent. I want to make sure I'm not muted. You can hear me. So thank you very much, Ms. Roll, for that. I hope that addressed your question, Lynette. We have another question, and I'm going to turn to Jimenita Swain from ZNS, who's joined us. And she's asked, with so many companies forced to go digital due to the requirements as it relates to COVID-19, what are the most prosecuted schemes in the country? Also, what is the main thing you want people to understand in not being a victim? Any key things to keep in mind, for example, too good to be true, etc. So I just want to note, unfortunately, I thought that Chief Superintendent Edgecombe was going to be able to join us for the question and answer, but he's not available. So I don't know that we have the answer to the first part of the question, what are the most prosecuted schemes in the country? But I will turn to our enforcement manager first for any comments he has on the question. And I'll see if Ms. Roll wants to say anything on it as well afterwards. I don't know if she does or not. So first we turn to Mr. Ward. Mr. Ward, do you have any comments on that?
My apologies. What was because it sounded like more than one part.
Sure. So Jimenita's asking, with so many companies forced to go digital due to the requirements as it relates to COVID-19, what are the most prosecuted schemes in the country? And she follows up by asking, what's the main thing we want people to take away regarding not being a victim of frauds and scams?
Okay.
That's
thank you very much for the question. I couldn't speak to the most prosecuted schemes. I can speak to what we have seen an increase in over the course of the past 3-5 years. We've had cause to repeat some of what we have issued before. So for example, which is why we're focusing even now on Ponzi schemes or scams. In 2017, we issued a notice and we had an explanation of Ponzi schemes and pyramid schemes in that notice, and we've issued it, or reissued it rather. Again, that would have been September, just last month. Much ado has been made about the ASU, and I'm sure that there are many, if not everyone, perhaps in this session, that is familiar with that. And it has taken on different life forms, if I can call it, the various adaptations that. Now, if something that you are familiar with changes to any degree, I would say you should look very carefully at it to see if that's something you want to put your money with. It almost relates to another question I've seen here, by the way, but we'll get to that a little further on. But if it's something that in your mind, it looks rather interesting, and if there is a chance that you don't understand it fully as you do the thing that you are used to, and I think we're all used to what I would call the orthodox or the original ASU, where you just have a circle of persons. It's a defined circle. It has a certain number of persons. They all put in a certain amount of money, and each person draws from that pool at a predetermined point until everyone has received something from that pool. That is based on trust, and in the normal circumstances, you trust the people that are a part of that pool. That's why you put your money in it. When it now goes outside of that, that's when you start to run into problems, because frankly, you don't know a lot of the people that join that particular scheme or that program. So yes, we've seen an increase in the change to the ASU that we normally see, or the orthodox ASU, as I called it. Again, numbers, that is something that I think Mr. Edgecombe would have to speak to. My apologies. The second part of that question now would have been.
What are the main takeaways? What is the main thing you'd want people to?
I think I mentioned that in speaking to this.
Yes, you did.
Be very aware. If it's something that changes, you need to look at why has it changed? Why are you trying to change something that seems to have worked? If someone is trying to, I don't know, produce something that may look a little more interesting, and so it may draw more people, and that's normally what it's about, by the way. That's something you may want to take a step back and ask yourself, is that something I want to put my money into? Because at the end of the day, and I would have said this yesterday, it is your money. And you have to determine how best to spend or to invest that money. And that relates to just about anything, not just securities. But in the context of securities, the more so. Because again, investing, it is not a guarantee. It is you using your best efforts to put your money into a program, which when you have looked at it fully in the round from all angles, as much as you can, you've gotten the information about it, then this is something you determine will give you the best return for your money. And so I hope that helps.
Mr. Ward, thank you very much for that answer. Jimenita, I hope that addresses the question. It's good to see you, to virtually see you again. Jimenita and I used to work together once upon a time. Ms. Roll, did you want to add anything to that, or?
No, but I think what we can do for Jimenita is to send her our speaking notes. Certainly she'll find the answer to the questions that she have in there. Well, that particular question, but just to confirm what Gwen is saying, the scheme that we're seeing the most of is really the pyramid in the Bahamas. That is what is impacting, what it looks like it's impacting ordinary people most. I mean, when it comes to international activity, then we see some other market manipulation activity, but certainly in terms of ordinary persons and ordinary Bahamians, we see the pyramid scheme impacting them the most.
Excellent. So, you know, we have two more questions that are interesting, but since we're on this, let's pivot to a question from Evans Fortillion, who asks, and I'm sorry if I'm pronouncing the name incorrectly, she asks though, what are some of the things that the SCB would advise young people to invest in? And it's a good question because I think it's an opportunity for us to talk a little bit about the SCB's role and whether it's really our role to provide advice. I'm going to turn to Mr. Ward. Before I do that, I'm going to share a link with you though, because we do have some excellent information on our website about investing, including a book that would help you to get started with some of the things that you need to ask yourself, some of the questions you need to ask, some of the fundamental steps you need to do to position yourself to be able to invest, to ensure that you have, for example, your budgeting, that you've set aside emergency savings, that you understand concepts like risk and diversification. And it may sound complex, but these are some things that you really want to read up on and understand to help to prepare you for investing. So with that said, though, I'd like to turn to Mr. Ward. I'll repeat the question again, Mr. Ward.
Yeah, I actually started to respond to it there. My apologies, because this is one that was, in my view, related to what Jimenita Swain asked as well. When you're talking about, well, what do you invest in? I think that was the question. What would you advise young Bahamians to invest in? And now, while we are not in a position to tell you what to invest in, because we don't advise persons in terms of what you should put your money in from which you shouldn't. However, in terms of how you go about doing what you do, that is the main concern, I think, for the commission. You will determine what you invest in, and I will only say to you, you should understand what it is you're investing in. This is why it is so important to inform yourself and get whatever information you need to make the best decision about what it is you're going to invest in. I mean, I can tell you, and it will depend on, of course, your investment goals, your investment objectives. This is something, information or advice on that you will get from, and I'm only saying that these are places you can go, but you will get that from, for example, a firm that will be able to tell you more about investments and the types of investments and what you as an individual, and depending on your financial circumstances and what it is you want to achieve by investing, they will inform you and advise you on what sort of products you should invest in. But I will say this, be careful of anything, again, that you don't understand. You have these, what they call esoteric, or these securities that are created, they're very complex. And so they sound good. Persons would tout them because they sound good, but always remember, you should be investing with your benefit in mind. At the end of the day, you should understand, therefore, whatever it is that you decide to invest in, you need to understand what that investment is about. What will the yield be for you at the end of it all? And how long you want to invest. And these scams or schemes to which we referred, you find, of course, that persons, they get money from you and you don't get anything from them. And you are left basically pouring money into schemes or scams as opposed to getting anything appreciable from them, if anything at all. So be careful investing in products you don't understand. As Roel would have mentioned it, ask questions, ask more questions. Make sure you are satisfied before you walk away, having given your money to whomever. Be sure you are satisfied with the product that you've decided to invest in.
Excellent. Thank you very much, Wayne. So we have, there's one more question in the queue that we want to answer. We're at 3:13 now, so we started a little behind. Want to give everyone a chance to log in, but we can definitely go on a little longer. So, but I want to address this question. An anonymous attendee asks what our thoughts are on crowdfunding, and I think it's an interesting topic for us to talk to. So, Ms. Roel, do you want to share our thoughts on crowdfunding?
Yes, certainly. Probably about 3 years ago, crowdfunding was the hot topic. I mean, so we went to every securities conference, and certainly crowdfunding was really thought to be where everyone was going to be raising money in the future. I don't know that that's panned out to be the case, but certainly in the context of the Securities Commission and in the context of the Bahamas, we do think that there is an opportunity for crowdfunding activity in the Bahamas, because what crowdfunding has the potential to do is to allow entrepreneurs who are just starting out to have some alternative means of raising capital from the markets without going through all of the hoops and all of the requirements of a traditional IPO. So we think that that this opportunity is something that we wanted to pursue, and the commission has drafted what we call business capital rules. And what those rules will do is it will allow entrepreneurs to raise up to $3 million on a crowdfund platform without having to go through all of the requirements of an IPO under the Securities Industry Act. or it will allow them to raise up to $5 million on a over-the-counter platform, that is through a broker. So yes, we do think that there is room for crowdfunding in the Bahamas in as much as it can spur activity in, and I hate to use this cliche term, but it can spur activity in what we call a junior market, where larger companies may not be attracted to, but certainly small entrepreneurs can.
Excellent. Thank you very much. We have one final question that we're going to take, and we're at 3:16 now, and it comes from Evans Fertillion, who asked the question earlier. She asks, can retirement investment plans be known as Ponzi schemes? Ms. Roll, you're laughing, so I'm going to give you an opportunity to explain the smile and to talk a little bit about, to address the question.
Now listen, I'm laughing because someone always inevitably calls, a national pension scheme or some other pension scheme as a Ponzi scheme. So really the difference here is this, and I know where you're coming from, and don't think I'm trying to put off the question at all. But the difference here is this: in a pension scheme is backed by actuarial calculations, which calculate the liabilities of the scheme, and they assess the risk. And so at all points, the pension, the sponsor of the pension scheme, they know how much liability they have to the scheme, and they know when they need to meet that liability. The problem you have in a Ponzi scheme is that the promoter or the broker or whoever it is who's operating that scheme, they have no idea what their liability is on any given day, and they are relying on new monies to fund any outgoing transfers. And so you have a big difference in terms of risk management. Okay, so a pension scheme and even the national insurance scheme is not exactly a Ponzi scheme. So do not characterize it as such, please.
Thank you very much, Ms. Rowan. Appreciate the opportunity to clarify that, because you're right, a lot of people in the world have some of these conceptions and preconceptions. We did have a question from an anonymous attendee, which I'll just address. She or he says, we talk about pyramid schemes. Do you think that with proper management they can work? Is there ever any way to stop the recruiting process? And the answer really is no. They're, as Ms. Rowe pointed out in her slides, they're really unsustainable. The math just cannot be sustained. If all that's happening in those pyramid schemes, there's no actual business activity. It's just really new money coming in to pay old money. And the new money is coming in from different people. And there are only so many people in the world. So assuming you could get to the point where everyone in the world was in your pyramid, there'd be no next step, there'd be no next phase. It would actually end for the last 4 billion people that got in, or whatever it is. So pyramid schemes by their nature, there's no business activity to manage. There's really just money to move around until there are no new victims to recruit to the program. So I don't know if there's anyone wanted to do any final chime-ins before we wrap the program? Well, I'm going to say to everyone who's joined us, thank you so much for joining the Securities Commission of the Bahamas for this webinar. Please tune into our website and Facebook page, where we will be continuing to celebrate World Investor Week with various messaging. And on the 21st of October, the Commission is going to be hosting a special webinar focused on the new digital assets and registered exchanges legislation, emerging technologies legislation, which is very exciting and really speaks to, I think, a new area the Commission, the Bahamas, is moving into. So please join us on the 21st for that webinar. We'll have more information about that on our website shortly as well. We really, again, would like to thank everyone for joining us. I'm just going to look up at my hosts and ask if there's anything else anyone wants to add or chime in on as we wrap up.
No.
That looks like a no. So we appreciate it very much. And with that, we tell everyone, have a great weekend and goodbye. Thanks for joining.